This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit better this morning. Corporate earnings coming in stronger than anticipated, so that helping this market in the overnight trade. However, a little bit of a move off of the highs this after consumer confidence here in the U.S. came in a little bit weaker than expected. But overall, futures holding up very well and appear to be ignoring bearish news when we do get it. Also, we do have the Fed meeting today and tomorrow. Most likely the Fed, at the conclusion of the two-day meeting, will announce another tapering of its quantitative easing program, probably by $10 billion per month, and that would take them down to $45 billion every month. Also, it is widely expected that the Fed will conclude the program by the end of this year. In spite of this, though, we do believe that the main trend for stock index futures is higher, even though the Fed is taking away some of the accommodation. Do not forget that the Fed funds target remains at 0 to 25 basis points, a record low, and will probably not be increased until the middle of next year, possibly at the end of next year or even later. So the main trend for stock indices still appears to be higher. Over in the currencies, we are seeing some short covering coming into the dollar index. However, I think this will probably not follow through. Seeing some pressure in the euro currency this after weaker than expected economic data. We also had German inflation numbers coming in a bit on the weak side. However, the pound is higher, even though we did have UK GDP coming in a bit weaker than expected, even though it did show an increase. So the pound continues to overperform the news, which is a sign of strength. And the yen under some pressure on ideas that Japan's economy will weaken now that the sales tax has been increased as of April 1st. So from here, I would look for lower in the dollar index, lower in the yen, and higher in the British pound. Credit markets seeing some pressure today, especially at the long end, on ideas that the Fed will taper their QE program. However, we are seeing a tendency for inflation levels around the world to come in weaker than the consensus views. Also, we do have overall generally slower economic growth globally, and I think those two factors should support treasuries in the long term. So once the Fed meeting is out of the way tomorrow, I think we can see the bull market resume for treasuries, especially at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.